Welcome back to Halftime Report on CNBC-TV18. It is very, very quiet for the market, but one stock that has been buzzing off late is Caplin Point after the company got an approval from the US FDA for a hypertension drug. It's a small market size, about $6 million or so, but let's find out more. We have Vivek Siddharth, who is the COO of Caplin Point, who joins us now to talk about that. Vivek, good afternoon and thanks so much for joining us. If you can tell us about this hypertension injection that you've got the approval for. We understand that it's a very small market size, about $6 million, but you tell us more. And any other approvals that have come through, what could be the next big trigger for the company in terms of, an opportunity and order win?
Yeah. So this is a good portfolio product for us. Like I said, it's not a very large-sized molecule, but there are different versions of this product that we are also working on, which have slightly bigger sizes at this point. And at this moment, we are looking not only on the US, but also ROW, which we call as the rest of the world markets, where we can launch our global dossiers in. And we're also expanding capacities because the order book has been quite good. There's a very decent traction from all markets. So we are gearing up to cater to that additional demand in the next couple of years.
Okay, so Siddharth, can you give us a sense of this is, as Sonia also pointed out, I think it's a $6 million opportunity, this particular hypertension drug. But what's the overall pipeline looking like as we look forward to the rest of this year and then on to FY23?
Yeah, so we've had a decent number of approvals this year, as you might have seen in the past. So the focus right now is to make sure that we launch all these products and we maintain a decent market share. The overall pipeline obviously is very robust. We are working on close to 48 molecules, which are at various stages of development. Some filed, most of them under development that will be filed over the next 3 to 4 years. And taking into consideration such a large pipeline is also one of the reasons why we are going for expansion of our capacities, because the idea is to launch these products as close to approval as possible. Otherwise, they're just going to be sitting as assets. So obviously, this is a long gestation game. We're also trying to backward integrate into our own API for many of these products. So yes, like I said, we need to be patient. We need to be very much long-term when it comes to the US market.
Okay, so what does that mean for your growth in the US markets? In FY21, you saw growth of 30%. What is the sense on growth in FY22? And did the latest wave that we saw in the US markets, did that improve sales for you?
Yeah, so our larger business obviously is Latin America. Today, 90% of our revenues is coming from Latin America, and I expect this to continue over the next 2 to 3 years at least. But if you look at a 5-year horizon, we expect the US to take over around a 30% chunk of our overall revenues. The US has opened up for sure in many areas. I think outpatient services have started to resume in the US, so we are seeing in the last few months an uptick in terms of requirements. Let's see how that proceeds as the year goes by.
Okay, you have about 530 crores of cash on your books. Any plans to utilize that cash in terms of any acquisitions? What more can that money be used for?
So we have gone for 3 expansions in-house. One is we are building our own oncology facility. We've already bought the land and buildings for it through a bank auction, and we've already ordered the process machineries, etc. So that is a 100 crore expansion. We are also going for expansion of capacities in the current sterile plant that is going to be 160 crore. And there is something else that we are working on, which is not greenfield. Of course, when we have more information to share, we will. But there is something else in the works as well that we are working on at this moment.
Okay, so lots of expansion. Speaking of capacities, I believe one of your injectable plants that is under a US FDA review, if I'm not mistaken. Could you give us a sense of what the development is over there and how significant is that facility in your overall scheme of things?
Yeah, so this is not a manufacturing plant. This is a CRO, this is where we do the clinical and bioanalytical services. This is, right now, it's not a profit center. This is going to be something that we typically would be using for our own products, where we do bioequivalent studies of our products compared to innovators. But in the recent past, we have converted this into a commercial facility as well. So one of the partners that we work with has filed a product in the US, which has triggered the audit. So it's definitely very good news for us. So once the approval from the US comes through for the CRO, we'll be able to use that to get desktop audits approved in, let's say, Brazil, Chile, Mexico, etc., which are all our key markets. So it's a very interesting development for us, and hopefully the approval comes through. The audit is going to happen by last week of September, so we'll update as and when it happens.
Okay. So Vivek, all these expansions, the backward integration that you're talking about, the approval in the CRO plant, what would that mean for the company in terms of growth overall? Q1 and FY21 have been good. Will you be able to maintain that 23 to 25% growth? And in terms of margins, at 30 to 31%, that is maintainable?
Yeah, business is good. By and large, it's. I would say, we've sort of gone past the whole COVID spurt, and business and cash flow continues to be very good in our existing markets and the newer markets that we are getting into as well. Our margin is probably at its lowest point right now because we are still, in the red when it comes to the US side of things. So that is obviously dragging things down a little bit. So once we achieve break-even revenue, break-even profitability from the US side, you would see a boost to the bottom line. So at best, you can start to see an uptick in numbers, but at its worst, we don't see these numbers going down from here.
Okay, but you're sitting on a base of around 1,000 crores in terms of annual revenues right now. And FY21 was a very strong year for you, almost 25% growth on the top line. What do you think a sustainable growth could be over the next few years for the company?
We feel 20% is achievable in both the top line and bottom line. I think at a larger base of 1,000 crore, I think 20% is a reasonable target. Internally, we might be working on something else, but definitely I think something close to 20% is very much manageable.
Okay. All right. 20% growth is what Caplin Point Labs is expecting. The stock has spiked to the day's high, up around 4.5%. Vivek, thank you so much for joining us and giving us all those details about the company's outlook. Well, with that, we'll slip into a short break now. Up next, Jay Thakkar of Marwari Shares and Finance will join in with some trading strategies on the other side. Stay tuned.